Hello and welcome to Un Eff Your Finances podcast with your host, Nick St. George. I'm your podcast producer, RJ Malik. Nick, welcome. And we're back together for another podcast. Looking forward to it. And we're going to be talking about choosing the right financial advisor on this podcast. So why don't you expand on that?
RJ, always great to get the band back together. You and I were just crushing these episodes. It's always a pleasure. But a lot of my podcasts, I've talked about, hey, what are problems? What are this? But how do you pick an advisor? Like, yes, I'd love you to pick me. I'd love for us to be a good match. But like, just in general, how do you un-F your finances? If I'm not your person, or hey, you're in Montana and want to sit down with somebody, what are some questions? Like, what should you do? Especially, hey, I'm looking out for those game changers, wealth builders, those high achieving business owners, executive leaders, that sort of thing. Or if you're just starting out investing, or you're just trying to figure it out, or hey, what do I do with my money? And what should you be asking your potential financial advisor, whoever that might be? It doesn't need to be a do-it-yourself project, but you need to have that right team, whoever it is, in your corner working for you. So I'm going to go through 9-ish critical questions you need to ask your advisor, because let's be honest, a wrong fit could not just cost you dollars, but missed opportunities and unnecessary risk. Like, most people don't know what they own, and it's only when you have like a big market pullback that they realize, oh shit, moments. And that was one of my favorite videos of me dropping a couch in the car. But and I think one of the biggest things, and this is tricky, we kind of touched on this last episode, you're successful, you're crushing it, things are going well, money's going in, and you think that automatically translates into wealth management expertise. What I'm telling you, and I've seen it countless times, you're brilliant in your field, you're amazing at what you do, but this is Greek to a lot of people. We're not taught finance in high school, and I really think that should be a core, call it adulting 101, just understanding interest, credit cards, all that fun stuff. But just because you're successful in your field does not mean you're automatically great at this. Look at how many billionaires buy sports teams, and they're amazingly successful in their field, and they suddenly think that should automatically make them win a Super Bowl. Please see my local team, the Carolina Panthers, right? Guy's brilliant, amazing career.
My team, the New York Jets.
And then, so understanding, hey, like, just because you're bright in your field doesn't automatically mean you understand all this. And sometimes it's overly complex. And the other thing is, time is your most valuable asset. And being able to find a partner that you're comfortable delegating to free up your time. Do you really want to rip through this? You want to spend the hours analyzing this, or building your plan, or doing all that stuff. And so that way that you can just focus on what's most important to you. And I don't know, I keep talking about this. It's that workout, get you to that work optional lifestyle. At the end of the day, retirement's a number, but knowing that you control your own destiny, that you have enough money saved that, hey, work is rewarding, and it's financially rewarding, personally rewarding, keeping your mind sharp. You enjoy the people you're working with or the type of work you're doing. And knowing that you can call it quits at any point, that's work optional. That's that ideal, I think, retirement for most people, because most people can't go from working 40, 50, 60 hours to nothing. Like, most people kind of like slowly decline. All right, we'll work 30 hours. Then we might have 20. I got a good friend that just geared back. He's no longer full-time. So he's doing about 30, 32. And he's like, I feel so much better. That amount of stress I've taken off. And is it a hard retirement? No, he's easing kind of that glide path, if you will.
Sure. That makes a lot of sense. So I guess I have a question for you. Are you a fiduciary at all times, or do you wear many hats?
No, you got to be a fiduciary at all times. Fiduciary is a fancy word of putting your client's needs ahead of yours. And Eric and I talked about this. You got these people that will sell a product for golf balls or a steak dinner. That's not being a fiduciary. Like, fiduciary means you're putting their best interest. I'm trying to find you the best way to get to your goals. And I can't do that because, that person is pretty, or they bought my dinner, or they supported an office function. Like, that's where this fiduciary stuff, or the other part that really is sketchy, is some of these kind of insurance first places that are pushing their proprietary product. And they have the option to sell everything. They'll sell you, we can sell everything. But if they don't sell their own company's product or whatever it might be, then they don't qualify for the trip. Their grid is clipped. Like, they don't get paid as much. And that's where you get these people that claim they're a fiduciary and kind of gloss over where their conflict of interests are. And if you do have a conflict of interest, if you tell someone in the front end, you're still acting as a fiduciary. But a lot of people just gloss over, oh, I'm a financial planner. Do you have a CFP? No. Like, no, you're not a financial planner. Like you can't just, people put lipstick on a pig on a lot of different things. But at the end of the day, fiduciary you have to take care of your clients, put their needs above yours. It's amazing how well you get referrals and your business grows if you take care of people. Right.
So if I'm looking for a financial advisor, then the first question I should ask then is, are you a fiduciary?
It's going to be in that first 10, 15 minutes.
Okay.
Because if they can't answer that pretty quickly, like that's table stakes, right?
Okay.
That's clean sheets of the hotel. Are you a fiduciary? And the next one, how are they compensated? Right? I'm going to pick on him. My grandfather was transacting business with a local person in Cape Cod. Asked him if he had charged him anything. He said no. He asked about a commission, but he was buying bonds. So on bonds, it's called a markup, not a commission. So the guy lied through his teeth of, hey, is it a commission versus a markup? At the end of the day, like you have to find out how they're getting paid. Nobody, goodwill. Oh, I helped out the Smiths and the Jones. I can't take that to my mortgage company and be like, I'm a good person.
Right.
I've helped people. If they tell you they're not charging you anything and they're doing it, oh, no, you don't pay any fees. That just means it's hidden in how the hot dog is made.
Sure.
Like I'm primarily compensated two different ways. Either I can charge for plan only, like literally, hey, you want to run your assets on your own, but you need a financial plan. You want the tax analysis. Depending on how in depth we go, it's fee schedules on my website. Like, hey, you pay for the plan, or you can do kind of the AUM model. Hey, you pay a percentage of assets under management. Maybe you pay some of it for the plan as well. But if you don't see a line item on it, there's no fee. There's no hidden fee. Like all my fees are typically they're charged quarterly on if you're AUM, or if you do the financial planning, it's right there. But yes, I'm getting paid to do this. Like the expertise, the hours, all the stuff that goes into helping you stay on track. But they got to be able to answer that. If anyone in the financial services tells you you're not paying anything, that just means it's baked into the product. And then you have to drill down. If they still can't give you that answer, that's a major red flag.
All right. So Nick, let's just say, I'm meeting you for the first time and and I'm interested. I've heard about you and I want you to, possibly take care of my finances and my retirement. How often should we meet before, or how often do you want to meet before we make a final agreement on, working together?
I don't know. A lot of times it takes 3 or 4 times. Like, hey, just the intro, get to know each other. Is it a good fit? You're interviewing me as much as I'm interviewing you.
Right.
Like if we're not a good fit for each other, I might give you some high level guidance and just say, hey, I'm not your person, right? No different than, it goes both ways. Just because you have money doesn't mean I want you. Like, I don't want to willingly take on a headache. I view it as Noah's Ark. Like, I only have so many people I want to take on the ship.
Right.
Like, my dream isn't to have a team of like 2,000 clients. Like, I want to be able to know everyone, right? Like, I want to know about your kids. Like, I don't have this wild grandeur of having a 100-person office and 10, 20,000 clients. No, this is a personal relationship, a bond, if you will. My clients, a lot of them have worked together, seen my kids grow up. And so, yeah, that first one's the intro. Second one, maybe, hey, we'll get a little bit deeper dive. Third one, hey, we uncovered, here's my recommendation. And then the fourth one, maybe at them we start getting some autographs. So it could take 3 or 4. Sometimes people right off the bat want to sign, but they're like, hey, I didn't come into this meeting with all this documents. Like, think about it. If you walked into your doctor's office and they didn't ask you any question other than like name and date of birth, and they handed you 5 or 6 prescriptions, you're like, what's this for?
Yeah, right. Yeah.
Like, that should be alarming. If in the first meeting and they have not heard anything about you other than maybe a name and that you have a question, if they slide over their perfect portfolio for you, I'm pretty sure the next meeting got the same perfect portfolio. Like, you gotta figure out, you gotta diagnose the pain points. What works for you? My first meeting, I got a pad and paper and a pen, and we're just I might have the agenda just to kind of keep us on track, but you got to make sure it's a good fit for both of us, and truly understand, why are you there? What are those pain points? What are your aspirations? What's your why? Why do you care about working with an advisor? Why do you go to work every day?
Right.
Like,
okay.
It's not super happy fun time. You're working, yes, you're getting compensated, but what was your life like with money? So that takes 2, 3, 4 meetings. Like, sometimes it's a little bit quicker, but like, you got to really get into it.
And when do you think it's appropriate for me? Now I'm your client. Let's just continue playing this game. When is it appropriate for me to ask you about your qualifications and your experiences? Is that something I should do like right off the bat?
Hey, I call it 15 minutes in. Hey, at least tell me about it. Like, I don't know, school, I guess that's bigger for what football or basketball team you root for. But like, hey, what do you have for licenses? Like, a Series 7 lets you trade stocks, but you can cram for that. A lot of people's career started with passing a Series 7 within 2 or 3 weeks of getting hired. And if they didn't pass, they got fired. Like, I don't know, COVID seemed to make a lot of people suddenly cram to get their realtor license. Like, just having the license doesn't make you a planner and everything else.
Right, right.
So I have a lot of other letters after my name other than just asshole, or fluffy asshole. But like, think about it. Like, the world's ever changing. You have to stay on top of this. This isn't just a hobby. Like, so I have my certified financial planner. So CFP, gold standard for financial planning. So it takes a lot of classes, exams. It's the true fiduciary standard in my eyes. Covers investments, retirement, tax, estate planning, risk management. It's really everything. It's a beast of an exam. Prepping for that one and taking each module is almost like a master's level class, if you will.
Mm-hmm.
When you finish it up, they usually ask if you want to finish it up to get an MBA. And I joke, I'm like, most people, I have enough letters, and most people don't even realize what that CFP. So CFP, I think, is gold standard. Like, if they don't have it, ask them why. And I think they might have a reason. Like, I'm not saying it's a drop dead, but if they don't have a good reason why they don't have it, they're kind of winging it, right? You need to have a plan. You need that recipe, your secret sauce, whatever it is to get you to your goals is a plan. And not having that CFP is, hey, I count on my firm's 10-question risk tolerance to be your financial plan. That's not a financial plan. That's the same way I can pick out like internet for my house. Oh, how big is your house? How many devices? Like, That's not drilling down to who you are. So Chartered Retirement Planning Council, CRBC, that's retirement planning, because at the end of the day, most people do want to retire. Like, it's super important. CPFA is more for 401k plans, plan fiduciary at the businesses, those business plans. You could have a 401k plan for 1 or 2 people, or it could be like your Fortune 500 where there's tens of thousands of people. And then my personal, which one is, I think is, I don't know, it's worth its weight in gold, is BFA, and it's not big fucking asshole. It is Behavioral Financial Advisor. It integrates kind of the psychology and behavior, because people do stupid shit with money. They can't help themselves. They panic. They try to quantify it. They say losing money hurts 4 times as much as winning money. It's kind of hard to quantify. That's like pain. Like, on a 1 to 10, my 6 could be your 10. But truthfully, people get so emotional with money.
Sure.
And BFA is really where I'm trying to fix this 3-inch gap here between your ears. And yes, the CFP is the math and the numbers of it. The BFA is how to get you to emotionally connect with it. So you actually take action. You actually understand why things are going. And there's so many other letter soups out there. There's other designations I think are great. I don't have every one. I'm not going to sit here and tell you I'm just a student of the game and not any real life, but there's lots of other designations that are good. But there are certain ones that you pay $100, they'll give you some letters. It's important to know that you don't want someone that just kind of took a crash course. You want them to be in it, like in it for life, in this. They want to keep getting better, and rules keep changing. You got to do your continuing ed and all that other stuff, and staying on top of just the industry and changes and everything else like that.
All right. So then get into your philosophy as far as, and you, as we talk, you do touch on your philosophy throughout our conversation, but can you get a little more specific and maybe be almost clinical about your philosophy?
I know you're sick of my philosophy. It's all right, RJ. You can lean into that one, but no. How do they manage your money? Is Like, what do they do if the market has a downturn? What does it go up? Are they telling you that they've figured out the algorithm to time the market every time? Like, you have to, there's so many studies, and it's not sexy because it's boring. Because at the end of the day, time in the market beats timing the market. And they're like, oh, it's cliche. It's cliche because it happens. Like, over the last 100 years, 74 years, the S&P has been up, I think, roughly.
You're right.
You're trying to time that 25% chance that it might be down. And here's the crazier part with people trying to time it or say they have some type of algorithm that tells them when to get in and out, is a lot of times by the time while you're waiting, sitting in cash, the market's gone up so much that even when it pulls back, you're basically where you were at. There's a handful of times. There was a client I knew back in the day during COVID. He's like, yeah, I'm not ready to invest. And market pulled back. And here's the just pain point of it. He called his shot. He was right. COVID happened, but wouldn't get back into the market. And by the time he was thinking about getting back in the market was already back to where it was basically like January, February. And you're like, you got to have a disciplined strategy. They should be able to tell you, hey, how do they allocate money? What is their strategy? Personally, mine is, hey, downside protection is king, because it's a lot easier to come back from losing less. You go through those numbers. Hey, if you lose 50%, you're going to make 100% back. So think about that math. If you lose 50, so if you start with 100,000, lose 50, you're now sitting at 50. How do you get back to 100? You have to have 100% return. So everyone thinks that's fuzzy accounting of advisor math, but truthfully, like, downside matters. That's how I build my portfolios. They should be able to give you some type of answer of how they do it, right? How is that hot dog made? What is their secret sauce? You can talk about active versus passive. Some people like ETFs, some people like mutual funds. They should be able to give you some type of, I don't know, credo or value of what they do. What are their core values and how their portfolio? What is the most important to them when they build their portfolios? Or if they're not building their portfolios, hey, whatever my firm says, or hey, I want to get that trip in the Bahamas. I need to make sure I push you into this firm model. Ask them if it's a firm model. Is it your model, a firm model, or are you sponsored? Are you the NASCAR driver of portfolios?
Okay. What other services do you provide beyond investment management?
There's so many things that go into it, right? We do the holistic plan. We do the tax analysis. We're looking at titling your accounts, because at the end of the day, a financial plan is great, but if you don't have your, the legacy part, hey, what happens if you die? Where do these accounts need to go to? Who's most important? And some people, that's another thing. Like, we talk about compensation. We'll go back to this. Some people love managing their own money. I'm not going to sit here and argue with you, but there are people that, hey, I just want to plan only, or I want ongoing, kind of be your CFO. They're going to trade it. They're going to do their thing. Met a gentleman years ago. He had 4 monitors. He loved trading, but just wanted, hey, can you run my numbers, make sure I'm right? Am I headed in the right direction? That sort of thing. But we're going to look at these different wealth strategies, your tax efficiency, because nobody likes paying taxes, right? We're not going to go hide money, but how do we minimize your taxes? We're going to pay them. It's a necessary part of the game, but how do we be most efficient with this? If you're make all this money, but you have to pay 2/3 of it in taxes because the way it was structured or where you took it from and all that other things. And tax efficiency, not just during accumulation. When you get to retirement, where are you going to take money from? When are you going to take money from which account? Are you going to take it all at once? When should you pull on your Social Security? When should you touch this taxable? What about your pension? Where do they look? When do you turn them on? Most people don't need to turn them all on at once. Just because you're claiming retired doesn't mean you have to go light this place up like Yankee Stadium.
Okay. Is there such thing as a typical client, or is everybody different and you have to get to know them as we talked about before? You want to meet people 3 or 4 times. So is there a typical client? Or
typical client is kind of that, I call it the game changers and wealth builders, busy baller, whatever you want to call it. That's my typical client. But just because that's a typical doesn't mean each one of them don't have different relationship with money, different goals. So that's why this isn't a cookie cutter process. I might have my sequences of what questions to ask and what do we do? But depending on what your answers are, what your goals are, what have you saved, or your income this year, the output changes. That's where it goes back in those first meeting or two. We're not talking investing because I don't know what we need to do yet.
Right.
We got to understand, we got to diagnose the problem. I potentially have a leak in my roof right now, and I can't just go tell him, be like, oh yeah, patch there. No, I need this guy to diagnose it. What's my problem? What are my options? What do you think is best? And I'm not going to sit there and go tell him. I'm not getting up on the roof. I hate heights, and I'm way too big to go up on a ladder.
So you ask a couple of questions, and depending on the answers, will take you in all different directions, depending on the person.
Correct. You need to work with someone that understands your complexities. Now, there are certain people that, hey, a robo-advisor or whatever, it might be simple enough that you can answer 5 or 6 questions, and that's good enough. But as you start stacking up and those commas and zeros start adding into those accounts, you can't just wing it. You got to understand, you need financial blood work. We can't just go high level and say, hey, oh, my neighbor takes Lipitor, I need to take it. All right, that's great. They have you can't compete with the Joneses on investments. Your situation, your finances are different. Like, go on my street, we have different business owners, another advisor. We're all doing things. Everyone's portfolio probably looks somewhat different. What are they doing? How they're saving? It's so different, but you have to have someone that can at least process those complexities and really drill down on what's most important to you.
Okay, very good. You've given us a lot of information, and just, so much is helpful. And the thing that I like talking to you, it makes me think about my situation and how I need to go about planning you. And I think that's a strength of yours, is because you're asking different questions. You make people think, what are the right questions though?
And we're kind of going through, hey, some of the questions asked, but you need to understand, ask yourself, and nobody likes talking about this. If I die, what happens? If I die tomorrow, what would happen? Nobody likes saying that. My partner, what happens if they die? What happens if my parents get sick? Are you financially responsible for them? You got to ask some of these difficult questions. I'm not saying every time we meet, we got to ask this, but when you're going through this, ask those questions. And what are their answer? If you're sitting down with an advisor, you probably have accrued some assets, you've done some things the right way. Now, you may not understand finances all the way, but if that gut feeling goes off, or that, hey, this feels like a used car salesman, it probably is, right? I have some clients that fell for a Ponzi scheme. That, I tried to get them, and hey, this sounds too good to be true. I'm like, yeah, it is. This got some red flags here, and they went with that. Now they're with me, but at the time, they went with the Ponzi scheme. Hey, if it sounds too good to be true, more often than not, it is.
Yeah.
If somebody tells you, oh, we've never had a down year in the market, they're full of shit. Yes, down years happen. I don't want them, right? But it's part of it. We're going to lean into it. We'll take advantage of it the best we can. But you have people promising things that just, in your heart of hearts sound like bullshit. It is. It really is. And ask those questions, see what their answers are, read them, right? If they seem evasive, seem a little sketchy, maybe at least meet with a couple other ones, right? Don't just meet with one and say, hey, didn't quite like their answers, but I'm still going to go with them. You're going to trust them with your hard-earned money,
right?
Hundreds of thousands of dollars or whatever it might be. I don't care if it's 20 grand, you worked your ass off for it. Make sure you ask questions, feel comfortable. There's no bad questions. Fire away. Right? They should be able to answer. And don't get me wrong, there are certain questions that you might ask that, hey, I need to research that. And that's usually more the granular stuff, but how you compensated? What's your philosophy? Do you have any designations? Do you have any conflicts? The conflict question, I think, is where a lot of the insurance-based people are going to get their hands slapped, right?
Interesting. Okay. That's interesting. All right. Well, Nick, you covered a lot of ground. How about some contact information? How can people get in touch with you?
Reach out, go to stgeorgewealth.com. Hopefully this will help you on Eff Your Finances. Always having fun. If you have a question, or just in general for me, go on the website, book a time, there's the Ask Me Anything right there on the calendar. Pick a time that works for you. I'm just a call or email away. And if some of this pokes some questions or at least a little concerns, like ask, right? There's no harm in asking a couple questions. Or even if you just need, hey, what should I ask my current advisor? I'm happy to give it. There's a lot of good advisors in the Charlotte market that I'm friends with and respect, and we collaborate. Like, so trust me, I'm not trying to get everyone. I want to be as big as small as I can, truly lead up to my high school nickname of Tiny. Like, I like being able to talk to all my clients. I like knowing them. Like, I don't want to just be a conveyor belt. So I'm not trying to get every single one. I want good fits. I want mutual. I want to enjoy working with them and see them grow. So yeah, but stgeorgewealth.com, you can get all my contact info there and hopefully get you uneffed.
Very, very good. All right, Nick, that's excellent. Looking forward to your next podcast, and thank you for listening to today's Un Eff Your Finances podcast. Please like, follow, and share this podcast with friends and family. Until the next Un Eff Your Finances podcast, I'm RJ Malik.
Thank you for listening to the Un Eff Your Finances podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.stgeorgewealth.com or give us a call at 828-481-8836. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of St. George Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA and SIPC.
Any guests in their company or companies are not affiliated or endorsed by LPL Financial unless otherwise stated. Individual tax and legal matters should be discussed with your tax or legal professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.